Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news of some increasing bumps in the road. Firstly, the US has announced that its first quarter growth rate was slower than previously expected. There have been two prior estimates, but today they were downgraded to just 2% from 2.2%. That is not insignificant and is based on much weaker consumer spending growth than expected, its lowest in 5 years. However, Wall Street is firmer today in the belief that the second quarter growth will have picked up. Things are not so good in some key emerging economies, many of whom are especially susceptible to a strong US dollar. Argentina is now almost certain to fall into recession. Turkey is now facing the consequences of a pre-election temporary boost to its economy, where investors are diving for the exits because they know such moves were unsustainable. Oil-rich Venezuela has inflation of 25,000%. Essentially, it's a failed state where the rule of law has collapsed. And of the TIVA states, perhaps Indonesia is doing best and pulling back from a religious extremism threat at the same time. But its currency is still falling and more rate hikes are due. And perhaps we will need to add Brazil to our watch list too. In China, official concerns are growing about the short-term sustainability of some corporate debt, especially by property developers. Can-kicking is the preferred solution. It is not only private firms in stress, the worries extend to some large local SOEs. And yesterday, the Shanghai Stock Exchange lost another 1%, and that takes the total drop to top 20% down in the emergence of a bear market there. The fundamentals don't look too good. However, the Belt and Road rail links to Europe are getting praise. One city has now made more than 2,000 such train shipments, for which it is claimed the China-Europe railway costs 1/5 of the expense of air freight and takes 1/3 of the time of shipping. Nationally, more than 6,200 rail trips were made to Europe on 57 routes in 2017. The US Treasury 10-year yield has recovered 2 basis points from yesterday's sharp fall and is now at 2.85%. The Chinese 10-year is at 3.57%. That's down 2 basis points, while the New Zealand equivalent is now at 2.88%, down 4 basis points. US Treasury 2-10 yield curve is unchanged at 32 basis points and still an 11-year low. Yesterday, the New Zealand 10-year swap rate fell to just 3.03%, and that's its lowest since November 2016. Gold is down yet again, this time by another $5 in New York to just $1,247 an ounce. It is easily a new 2018 low and almost a one-year low. Oil prices are higher again today and now just over $73 a barrel in the US. The Brent benchmark, however, is unchanged at $77.70 a barrel. But the Kiwi dollar will start today at just 67.5 US cents and down almost at 0.5 cent again from this time yesterday. On the cross rates, we're also lower at 91.9 Aussie cents and 58.4 euro cents. That pushes the TWI down to 71.1 and its lowest level since May 2016. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.